Hi, everyone, and happy Friday. This is Tom from MarketsFlow. It is the 29th of November, and we're recording this partway through Friday as we bring you our weekly performance for the week ending 29th of November, 2019. I'm here with Adam. How's your day been, Adam?
Very busy, but bearing up, all things considered.
So, sounds good. All right, so let's get started. This is the Webcast 31 for MarketsFlow's portfolio performance for week ending 29th of November. Our podcast is recorded every Friday and is uploaded immediately on YouTube. Please subscribe to our channel so that you can receive it as soon as it's made available. MarketsFlow is an FCA authorized robo-advisor and digital wealth manager. We're also SEC authorized. Your deposits are protected by the FSCS for up to 85,000. Log on to marketsflow.com to view our weekly portfolio performance. Go to Apple Store to download MarketsFlow app, or go to Play Store to download our Android app. Before we start, I'd like to run through our disclosure. Your capital is at risk, and any financial performance figures refer to the past, and that past is not a reliable indicator for the future. With that said, let's cover the important subject. How did our portfolios perform, Adam, this week?
Well, as usual, we're only a part of the way through Friday. 3 hours to go to close, but the situation as at the moment is high growth up 0.42% for this week so far, and that means since the launch of the accessible portfolios, 8.49% from the start of June. The same equivalent figures for the growth portfolio are 0.58 this week and 8.52 from early June. And for the ISA portfolio, up 0.5 from early June.
Okay, sounds very good. And how have the markets as a whole performed this week, Adam?
Well, again, as at the same time, with 3 hours to go, the markets, meaning S&P 500, was up 1.09% measured from last Friday's close. It has been higher in level yesterday than today, meaning that this is another week where some new highs have been made. So it's another week in which volatility has stayed pretty low, going as low as around 11.5 yesterday.
Okay, interesting. And how were the allocations set within the portfolios?
Well, portfolios generally this week are modestly allocated, with once again, and I think the previous 2 weeks were like this, all the action was in stocks, not in options. Peak allocation around 40% or just over. The average was a little under 30%, so a little less allocated overall than last week. But we were not afraid to shift that number around in a reasonably agile way in the direction of the market fluctuated a little bit from day to day.
And how were the portfolios risk managed through the week?
Well, so as I say, it's with a fairly low volatility market, but the ranges and the changes of direction making it a little bit more interesting perhaps than last week. So there was some benefit to shifting the overall market exposure around a bit, and also, again, having reasonable dispersion across the stocks within the index. There was also some decent reward available for stock picking. Less opportunity to make money in options, something we're getting used to lately. So that's basically the set of opportunities that we were given, and that's the way that we used.
You certainly make a good point. We've certainly been more allocated in stocks as of late. So what do we need to look forward to from here on over the next week or two?
With earnings out of the way by some distance now, I mean, one thing obviously to watch out for is do we keep on making new highs week after week like we have done for the last few weeks? We're on quite a good run so far for that. But in terms of news stories, aside from that, I've spoken before about watching the GDP figures coming out for Q3. That's really all happened now. And then following that, the business confidence figures and other similar survey-based measures, which are a bit more forward-looking, might help to capture the kind of quarter that is going to take place in Q4 for economies, to give some sort of steer on what the central banks are likely to do. And the way things are turning out so far, the messages are not clearly one way or the other. So, more data is being waited for, and I think markets remain somewhat fixated on a figure here or a figure there. I mean, there's been a lot of comment on the latest, relatively minor in the scheme of things, pick up in Eurozone inflation and some market reaction to that. So maybe the economics is where the attention is right now, and a fair amount of commentary on that until you get bigger stories.
Thank you, Adam, as usual. So that brings us to the end of our podcast. Thanks for watching or listening to us on YouTube. Please remember to subscribe to our channel. Have a great weekend. We look forward to our next Friday's podcast. Take care.